Welcome to episode 1553. Larry Robbins, hedge fund self-made billionaire, 8 lessons. This is an outline of episode 1553, lesson 1 to 4. This is lesson 5 to 8. Lesson 1 is 4 stock picking criteria.
Exciting opportunities we see in the marketplace today are companies that are flush with cash, that have significant debt capacity, that are defensive and growing, and that are trading at cheap valuations, cheap to where they could borrow in the markets today, such that they could enhance value and enhance the rate of return to shareholders.
Lesson 2, look for wise management.
When we're investing in the for-profit side with our business, we're looking for companies who operate in a good and growing industry, right? But we also want to make sure that we're investing with the management team who really understands their markets and who are going to make wise decisions on it.
Lesson 3, on healthy capital deployment.
For us, that involves a healthy dose of capital deployment. Borrowing rates are as cheap as they've ever been.
Lesson 4, everyone wins.
Aligning with the payers who can save total system costs for themselves because everybody wins. The payers can win, the doctor can win, the provider can win, and we obviously naturally believe investors can win alongside of them.
Lesson 5, wild fluctuation. As you can see from this wealth history chart, one year he made lots of money, another year he would lose some money. So his asset under management was $11 billion. Now it is about $7 billion. Lesson 6, you must look at political landscape and political risk.
Stocks, you need to look at the political risk. You need to figure out who's the decision maker. Stocks that have been sensitive to Medicare for all or the concept of mandatory Medicare have gone straight backwards since February. However, you need to understand that it's not just a presidential candidate or a president that can make it happen. You need both chambers of Congress, including likely 60 members of the Senate, right? And the president all to agree to it, right? The odds are extremely low, we'll talk. Whereas in pharma, because of something called the CMMI that was passed under the ACA, right? In pharma, the president can act unilaterally to reduce drug pricing, and in fact, President Trump is attempting to.
Lesson 7, his most famous wins, his biggest wins.
Successfully bet that U.S. healthcare stocks would benefit from Obamacare. The Glenview Opportunity Funds gained more than 100%, while his long-short equity Glenview funds returned a bit more than 44%.
Lesson 8, look for long-term benefits, say over a 10-year period.
1 year, we might not have a great year financially investing that capital, but over time, that's a pretty low bar to jump over. And so if a company is buying back their stock, they're investing in a 10% internal capital project, or if they're making an acquisition that's soundly diligenced and soundly financed, well, all those things offer better opportunities to use that money over time. And not only can companies get the benefits to that today in today's earnings and today's stock price, but that will benefit them throughout time.
Thank you for watching. Please subscribe. Leave your questions and comments below. Wishing everyone peace and prosperity.